Okay, so we are now advancing towards the tax group section, where we'll see that how the tax grouping itself is impacting the calculation of the taxable income, as well as how we can adjust the tax losses. So for the tax group provisions, very first thing we need to understand here is that there has to be a parent and subsidiary relationship. So which means that at least 95% of the shareholding is owned by the parent, whether directly or indirectly. It should have the the profit sharing, the voting rights, or the share capital allocation. So once this percentage condition is fulfilled, afterwards we have to fulfill all the following conditions, which I'll be explaining you now. That both should be the legal entity, which means that all the group entities should be juridical persons. They must be incorporated. They cannot be individuals, cannot be clubbed with the group companies. Neither the parent company or the subsidiaries would be exempt entities. None of them should be from qualifying free zones. Their financial year across all the group companies has to be same. Their financial statement should be using the same accounting standard. So once all these conditions are fulfilled, the very first thing is that about shareholding. With shareholding, we get parent and subsidiaries relationship. Once we establish this and we come to these conditions, we fulfill all these conditions. If all these conditions can be fulfilled in that scenario, what we'll do is that the parent company will consolidate the group financial statements, which means they will be calculating the group taxable income, and they will file single tax return also. So now we have to see that the unutilized tax losses, how we can adjust it. So for example, if we are having already existing groups, okay, and a new subsidiary is joining them. So in that case, if that new subsidiary is coming up and this existing group has some pre-grouping tax losses, okay, they cannot be offset against the income of the new subsidiary. And also, if there are any pre-grouping tax losses of that incoming subsidiary, it can only be offset against its income, okay, when it has been added into the tax group. So let's see an example here. So if I am having in 2024, I am having A plus B, and a new company also joins me at the start of the year, which is company C. Okay, and this company C was having some pre-grouping tax losses. Okay, some pre-grouping tax losses. In that case, what will happen is that when the parent company, in this case, let's say A, when it will form the group and will consolidate for ABC, in that case, the tax losses of C can only be offset against the income of C. Okay, these cannot be offset against the income of A and B. So which indirectly mean, in this case, we will have two calculation. We'll calculate the income of C separately, and we'll adjust its pre-group tax losses as per the applicable condition, and afterwards we'll file the single tax return of ABC. Now there could be some scenario where we may seize a tax group. Okay, once we seize a tax group, what it means is that the tax group will not exist. Okay, and there could be some unutilized tax losses. In this case, we have two scenarios which have been specified by the CT here, where the parent company is still continuing to be a taxable person. The group is being seized, but parent company is still active. All the tax losses of the group historically will remain with the parent company. Very important thing. If you are part of a group and you are now ceasing to be a group, so in that case all tax losses which are available will be shifted to the parent company. Second scenario is that where parent company altogether will cease to exist. Okay, so in that case tax groups losses will not be available to offset against future taxable income of individual subsidiaries. Very important up till here. Very important. When if a tax group ceases to exist and the parent company also ceases to exist, in that case all historical tax group losses will not be available for future adjustment by the individual subsidiaries, except if there were any unutilized pre-grouping tax losses of any subsidiary. Okay, this is up till here. Unless a new parent company is in place without continuation of the tax group. So without discontinuation of the tax group. So in this case what it says is that, for example, I was having a group A plus B plus C, and in that case we form a new company added here, and we are now A plus B plus C and plus D, and afterwards A, which was the parent company, it ceases to exist and D becomes the parent company. In that case we can still continue. Okay, D would be having the status of can say parent company, and we can still claim the tax losses here. But if the scenario is that with the ABC, A ceases to exist, C is separate and B is also separate, in that case we cannot claim any tax loss here which was belonging to the period in which we were part of a group. So it is again an important area where for all the entities who are planning to cease to be a group, they should also focus here that if they are having any historical tax losses, in that case they will not be able to claim any.